Hello friends and welcome back to the channel. Hope you're having a great day and you are enjoying scrolling through your YouTube. Today I want to give you a small, actually it's not a small, it's a large overview on Hello friends and welcome back to the channel. I hope you're doing well and I hope you're having a great day, and if not, let me know. I want to talk to you today about the overarching reasons that make Bitcoin, that make crypto prices go up and down, okay? Because I feel that there is a lot of false narratives as to why crypto, why stocks and shares, or finance assets go up and down in price, and I want to debunk some of those things in a very simple format. So I'm going to make this as easy as possible in the ears, and yeah, just go from there. So some analysts claim Bitcoin is impervious to shocks that affect global finance. It's a hedge against things like inflation. They claim it's a sure bet against tides of uncertainty. The media says the opposite. There's constant news articles showing Bitcoin is affected by exogenous market shocks, plus other things that don't touch conventional finance products, such as international regulation and social media. And like I said, I want to give you a quick rundown. So first and foremost, market events. Bitcoin's price often falls tandem with market events, global market events. When the coronavirus pandemic throttled global markets in March 2020, it took Bitcoin's price down, took crypto's price down with it. And I'm going to use the word Bitcoin because Bitcoin is the biggest horse in the race. Within the space of a week, in mid-March, Bitcoin fell by 57% to lows of circa $4,000. And like the stock market, it recovered and became stronger than ever, hitting all-time highs over the next year and a half. Analysts believe that due to the excess amount of spare time and disposable income some retail traders had during the coronavirus pandemic, plus the buoyancy of the stock market, meant that it rebounded. Bitcoin has reacted to other markets too. For instance, it fell 6.9% in late 2021 when traders feared that Evergrande, the Chinese real estate giant, was about to collapse and regain, and again when Diddy announced plans to delist from the New York Stock Exchange. More broadly, it has reacted positively to inflation, rising alongside consumer goods and services. But it's impossible to track all of the economic shocks that affect Bitcoin, but there's enough evidence to suggest that Bitcoin tracks global markets to some extent. When large numbers of highly leveraged traders all bet on Bitcoin's price moving one way or another, it creates an opportunity for large investors to move Bitcoin's price in another direction. Doing so triggers a cascade of liquidation, sending Bitcoin's price into a freefall, creating huge paper losses for leverage long traders. The whales are then free to pick up the Bitcoin at much cheaper prices at the expense of these wrecked traders. Finally, weekends also, believe it or not, can have a significant impact on Bitcoin's price volatility. Fewer traders actively are active behind their computers monitoring the markets during these times, meaning there's less resistance when price tumbles and not as much profit when Bitcoin spikes. This can often lead to more significant price swings in both directions. International regulation. International regulation has a serious impact on Bitcoin's price because it determines which markets can access it, where companies can set up shop, and where Bitcoin miners can operate. While countries like the United Kingdom, Thailand, and India have shown to have directly influenced Bitcoin's price, two major markets impact it most: America and China. Bitcoin's crash from close to 65,000 in April 2021 to about 35,000 by mid-June was in large part due to China's crackdown on Bitcoin mining. Bitcoin fell 5.5% when the Chinese government clarified in September 2021 that cryptocurrencies are illegal. In the US, Bitcoin responds to news from regulators and legislators. In 2021, Joe Biden's infrastructure bill hurt Bitcoin's price because it posed difficulties to decentralized wallet companies, which would have to report tax data about their customers that they, by nature, do not collect. Traditional finance. Moves within the traditional finance space can boost or burn Bitcoin's price because they determine how easy it is for financial epicenters like Wall Street to invest in Bitcoin. Moves would send more Wall Street money into Bitcoin, like major banks offering Bitcoin to clients, often correlate with price rises. Bitcoin has often risen when major companies announce they're going to add Bitcoin to their balance sheet. Tesla is one. Traditional financial products also have an impact on the market price of Bitcoin, particularly derivative products. that represent contracts that track the underlying price of Bitcoin. As we've already discussed, leveraged futures trading can often fuel steep price changes. So can other products such as crypto options, which is far too complicated to explain in one video or a snippet, so I'm going to jump past that. But in short, crypto options give the investors right, but not of the obligation to buy or sell the underlying asset. In this case, it's Bitcoin, at a certain price known as the strike price prior to or on a certain date. When a large number of out-the-money Bitcoin options are due for expiry at the same time, it can sometimes impact Bitcoin's volatility. Social media. Well, when tech CEOs all over the social media and lines between traditional finance and social media influencers can blur, retail investors appear particularly sensitive to comments about Bitcoin from large influencers. Elon, Bill Gates, the Facebook twins, Winklevoss twins. Bitcoin surged after Elon changed his Twitter bio to Bitcoin because it signaled to retail investors that Musk was strong and he was behind cryptocurrencies. He was behind Bitcoin and also Dogecoin. And he followed through on that with adding Bitcoin to the balance sheet with Tesla. However, some analysts have tried to look at social media to predict prices. In 2021, 2 South Korean scientists concluded that Bitcoin posts are more frequent when prices are higher and less frequent when prices are lower. A 2019 research paper from Indian analysts concluded that negative and positive posts are correlated with Bitcoin's price. So in short, there is a whole plethora of reasons why Bitcoin and why crypto reacts to certain things, but I wanted to give you a small kind of overarching areas of what affects it. Traditional finance, social media, so individuals that are commenting and talking about big influencers talking about Bitcoin or crypto, and market events, and maybe global pandemics. But despite the fact that Bitcoin might be down, there is always reason to believe why it might come up. And that I am going to say for another video. As per usual, it's a pleasure, and I will hopefully see you soon. Thank you very much. Have a lovely day.